In this video today, we're going to be taking a look at the euro. Here's a look at the euro US dollar. After the ECB met today, we're going to take a look at the price action and where this leads us. If you notice, the euro US dollar is breaking out over here of a 12-year trend line. This trend line goes back all the way to 2008, holding the breakout so far. We're now seeing the pullback. We're going to be taking a look also here at Netflix after hours as we are looking at, let's see what the headline is. Stock option traders are ready for a big move. And you have to follow what's going on over here with these Robinhood traders because they are all over the momentum. They're the day traders of the dot-com bubble, right? We're more of the investors, the ones who don't want to get caught holding that bag, right? And most of the day traders back going to the dot-com bubble, almost all of them got wrecked. You have to know when to take your profits. We're going to be looking at things getting way too overextended here. We're going to be looking at the dollar over here, the dollar at a very important support level so far, bouncing off of that. And we're going to be looking here at the S&P 500 as well. Of course, across the U.S. equity markets, we're going to be looking at what the next moves are, how we're going to position ourselves. We're going to do all that in this video. This is going to be another epic video. If you are here this morning, all week, Monday, Tuesday, Wednesday, Thursday, each day better than the next, go ahead and smash that like button in support. I thank you. Here we're looking at the S&P 500. We're going to start here, and we're going to start with this range that we were looking at. Right now, that's our plan. This is our trading plan. This is where we left off this morning on the live stream looking at the S&P 500, trading within this range on the 2 hour. And although it looked like the last hour of trading over here, maybe the last half hour trading, it looked like we were going to break out. Is that right? It looked like we were breaking out. We are back now within that range. So here's what we're looking for. A breakdown leading to the 3183 support. That's the next area. That would be where you'd be targeting. Are you looking to buy over here? We'll look at that in 1 second. Basically, though, if you're entering a trade, you're trying to push it past the first support or resistance. So if you're looking to play the downside here, that means you're looking for a bigger break all the way back to perhaps 3123. Also, and let me zoom out a second over here. You can see that's also our trend line resistance coming down over there. 3123 is the horizontal support. And then just under that, you have the trend line support coming in at 30.97. So there's some room here to the downside. Is it now makes sense to be looking at this point in time as we go into Friday at possibly looking for further risk off or further downside over here? We're going to take a look at that. We're going to find out how we should be positioning, where we should be positioning. By the way, the thing about the equity markets that I honestly can't stand is the fact, for example, here you have Netflix trading, reporting after hours. The stock is then going to be reacting, and then they're going to be like, okay, by the way, we have to close up now. And then you have to wait for the pre-market tomorrow to open up. It's a very inefficient, very, very inefficient market. I'm still interested to know, actually, two things. I'm interested to know how the Robinhood traders are positioned for Netflix here, because they're all over the option plays, right? And I also want to see, obviously, after the earnings, which way, how price reacts. That's the most important to me. Not interested in playing Netflix at all. And that is gambling right here going into the earnings, buying options here. What could happen is people get liquidated on both sides of that trade. Let's see if we get some volatility over here. I'm interested to see how that plays out. I'm interested here on the euro US dollar. Before we get into the euro US dollar, we do need to look at the dollar. And this is this a dollar story that we're seeing? We're seeing some mixed signals in the markets today. By that, what I mean is earlier on today, we were seeing the equity markets off, and we were seeing a weaker dollar. Look back here at the beginning of the session. We were seeing the dollar test this 95.84 support level. Let's see. I'm not sure. We have 95.84. All right. looking a little bit above that, same area. Look at the bottom of that box over there, the bottom of this red circle. That's our 95.80. Why we're trading above there, bouncing off this trend line right now. Everyone can see that clearly. I don't think that we're breaking back above 98 over here, right? And we're looking to sell any retraces into resistance right here on the dollar ever since we did break down below. So what happens here? Are you looking to buy the support right now? Let's look at the euro US dollar. Should you be selling the euro versus the US dollar right now? The way that I see it, and I'm holding my long, the way that I see it is that you've broken here this 12-year resistance to the upside. I'm looking on the 3-day right now, and I'm going to come down to the 8-hour where we trade in just a moment. But I just want you to see that's a clean breakout. And so far, we've begun the pullback to test whether or not that breakout's going to hold, right? And if it does and resumes off of it, you should be looking to add to longs and or continue pushing or holding longs. We're looking at a take profit somewhere towards this trend line. This trend line also going back 12 years. That goes back to 2008. That goes back towards the last crisis. That's a place to lean in to sell. When we do test that resistance, that's a place to lean in to sell for sure. That's a 12-year resistance, just as this was. And I took a couple of trades to the downside off of this resistance over here until I started seeing that it wasn't following through, and I started looking to the long side. But I was involved in this short, I think even this short, trying to get that rejection of that resistance. I stopped over here, started building the long side right there. What happens now, you could see this morning after the ECB, which initially you saw the euro rising out of that meeting. Here's that wick right here. You could see the price action. Price was coming up. I think this is where we got off on the live stream. Price was trading somewhere towards the high of the session as we got off. And we did an extra long live stream today. We went over 2 hours today. And then that was the turn in the market. And you can see now price now making lower lows than the previous session. What's going on over here? Is this has anything to do with the euro-centric, or is this a dollar story? Is it a combination of both? Or is it really just normal price fluctuation, breakout, retest, looking for that resumption up? We could still pull back all the way towards the area over here of 1.1329. That is that trend line, broken trend line resistance. Let's make sure that holds that support. You can see the horizontal support in that area as well. Let's look at this chart though for a second. Let's look at this chart. And I don't know how this showed up in my timeline. If you're following my timeline, I like some and retweet a couple of interesting things. For example, by the way, speaking of the Twitter hack yesterday, I've been asked a couple of times what it means for Bitcoin, why I don't think it means anything at all for Bitcoin, right? Let's look at kin.com says it reveals, and he says that there are government backdoors with God mode, full editing power for every account and every message. Evidence from email, smartphone, social media is no longer reliable in court because it can be edited. Backdoors can be abused as seen today. Interesting take. This is interesting over here. This is the sentiment trader is saying that the S&P 500 just moved up to within 5% of the 52-week high. More than 60% of stocks in the index are more than 10% below their own highs. This hasn't happened since September 2000. Immediately, I want to go back to September of 2000. That's the first thing that I want to do is see what was going on in September of 2000. And rewind with me right over here. By the way, let me do that on the SPY as it'll have the data going all the way back. Imagine 20 years ago. All right, September of 2009 is right over here. And we are looking at, wow, we're looking at the S&P was trading at or near its highs. That was the last time that this occurred, where 60% of stocks were more than 10% below their own highs, while the index itself 5% off a 52-week high. Interesting, right? And that we took a dump from there, huh? Well, let's see the total. Let's see the total dump from there. 50% decline. 50% decline. All right. So over here, by the way, and if we do have a weaker dollar over here, if the dollar breaks down, take a look at this trend line that Lincoln has drawn in over here. And if we break down below that, if we take out the 95.80, if we take out the 95.80 support, let me draw that in. Let me pull up the DXY really quick just so we could see where we are in this moment. That's what we were testing earlier today, 95.80. You could see that over here. If we break down over here, that could lead. We have a price target over here. We put a price target between 92 and 90 and a half. You could see this is the resistance, right? And you could see that area of resistance. So that makes a lot of sense, right? That makes a lot of sense. I think that's where we're headed. Now, whether or not that means that we break anytime within the next, in the immediate future, or that we have another hold of this support over here, don't really break out above that much above 97.30 and are able to come back down. If we do clear back above 98 over here, I have it at 98.30, he's got it at 98.10. If we break above there, at that point, we're looking for a firmer dollar. Until then, I'm looking for that softer dollar, and we could see a much softer dollar. Is there anything else on the Twitter before we get back into looking at the S&P we need to look at? This is an interesting one that I wanted to look at. This is NASDAQ 100 total returns. This is going back to 2009. Now, we just looked at a 50% decline on the S&P in 2000, between 2000 and 2003. What that looks like on the NASDAQ, I think the NASDAQ was hit harder. I would like to see that, to see what those returns look like. But this is when the QE started, and we've been going through a 12-year bull market. Just using the bull market, look, these returns are pretty exceptional, though. This is if you're invested in the QQQ, you could see by how much it's outperformed the S&P. But look at look at this. Look at that. That was carnage over there on the NASDAQ in comparison. Again, I don't know what's going on. They don't have the data leading up to the crash. I'm not sure what's going on back in 2003. I would like to see that, have that data to look at. Let's close this out looking at, by the way, I just want to again specify how much I have a repulsion towards the equity markets. And what's going to happen in a little bit. We're finally, when they do decide to release their earnings, because have you ever noticed, sometimes they make people wait. Elon Musk is famous for that, right? And it's nice knowing, all right, 8:30 a.m. Eastern time, you're getting this data release, and why the Chinese are often late in releasing their data on Q. Most of the rest of the world does it, right on time. And it's nice having that. Public markets are a different beast entirely. Nevertheless, I'm super interested to see what's going on there, especially with the Robinhood users and what they're all over. Here we're looking at the dollar, but I want to look at the S&P with you. I want to look at the S&P, go back and end with this. And before I do that, I want to take a look at the NASDAQ also. So we're going to look at the NASDAQ. I want to take a look at the Dow today. I want to see everything. The NASDAQ led the way on the way down again. So we're seeing that rotation, right? And this still looks really good. This is the NASDAQ, right? 100. It looks super, super, super good so far. It hasn't broken any technical levels to the downside yet. That would, get us leaning against this right now. So continue to look for further upside here going into tomorrow. I was looking at whether or not I want to take this trade to the downside over here, specifically on the S&P, right? And if I get a breakdown of this range, am I interested in taking the trade into that near first support level at 31.83? If I get there, maybe tightening my stop loss to break even and looking to see if this pushes down further. That's a great trade with a really solid risk to reward if someone's interested in getting involved in that. I'm actually only be interested in the buy side of the market right here. And for me, that means, if we are able to hold this level, we get a breakout above here. if I get the breakout above the 32.32, then I'm looking for further extension to the upside over there. On the downside over here, I'd rather wait and just see instead of trading it. Wait till we get a test of the 31.23 support in that area. Look to for a resumption up and an entry. That's a good entry in my opinion. Then I would be looking not only for the June high and then also now the July high, which we've had a double touch now. I would be looking for it to break, right? That would be a really solid trade to be looking to build into. So that's where I'm at. I'm continue only look to play to the upside right now. If we see things deteriorate, and we'll be there. Right now here on the dollar, we're just coming up into an area of resistance right over here right now. I'm expecting the dollar is going to resume downwards and break this support. That should carry the equity markets upwards. Now, is there a possibility that doesn't happen? Is there a possibility here that the dollar is able to go ahead and, because if it gets above like 96.50, right, or even a little bit higher, it's going to be taking a run at 97, right? 97 loses, then all of a sudden, all right, now we're looking for a break here, and if that break happens, we're looking at a firmer dollar. I don't think any of that is in the cards. I think we're looking at a weaker dollar, and I think we're looking at rising equity markets. They look overextended to me. For sure. Whether you just look around and we'll just look at whatever I have here on the list, whether it's Tesla, Apple, Amazon, Netflix. Again, one of the most important things I think I need to say at this time right now is $3,000 Amazon sounds good, but does it sound as good as $2,000 Amazon, right? Without the $4 trillion expansion of the Fed's balance sheet. People think since the numbers going up, that the value's going up. That's not true. The equity markets are actually a good play against a declining dollar. There are better ones. We're not going to get into gold today. It still just maintains around 1,800. It's still consolidating over here. Looks fantastic. Silver off a little bit today. Looking to buy both on pullbacks into support. Bitcoin also, although still holding that 9,000 level, it is hugging it. Could it break down from here? Could we see Bitcoin break down? If we do get a test of 8,500, you have horizontal support. You also have trendline support there. Make sure you have your Make sure you have your orders in if we do get down there. Those look like opportunities to buy for me, and it continues to be. I'm accumulating, right, through the end of the year, through the beginning of next year, between 20 and 30,000 Bitcoin. I am, I'm making purchases whenever possible. So that is our look at the markets here this afternoon. The sessions have just been really so nice in the morning. I am so grateful for all of you being a part of that. I look forward. Tomorrow's Friday. I'll see you all then.